Is Jim Paulsen, the chief investment strategist at Wells Capital, a frequent guest on our program. Jim, good to see you. And I do want to get some reaction from what you just heard from Peter. And what struck out at me, is this talk from Geithner that markets want to see more action from the government officials. I thought that markets just want them to butt out.
Well, I think that, I guess what I'm keeping an eye on, Betty, in this thing is it's not even so much about the level of debt or restructuring. I think it's whether the market's going to let them refinance it or roll it over or issue more. And that comes down to watching the 2-year government notes of Greece and Spain and Portugal. And if they respike, then effectively they're all technically insolvent if they go to levels that are prohibitive. And I think that almost $1 trillion backstop that Euro has put out there, I think Geithner's referring to that maybe they should be more aggressive in ensuring that those refinancing rates, if you will, for these affected countries stay down. They're doing that for Greece. They come back in from 18% to 7%. But I do notice this morning that both in Spain and Portugal, they're climbing again, and that's what I think. And so the
answer to that then is more backstopping from the governments. Is that sincerely what investors would want?
I think so. I think that the restructuring or growth is going to take time. There's nothing the European government can do to force quick restructuring, I don't think. That's a multi-year program. But it has to be done is they have to extinguish the immediate panic and with force, like the U.S. did here with massive funds devoted to the imminent problem. And so far, I think Europe's a little slow on that. And I think that if you read between the lines, Geithner's saying you got to be more aggressive.
Right. And quickly, Jim, before we head to the bell, are you still seeing, though, that at least those efforts have helped with some of the fears there? I mean, we know we've seen a lot of fear lately, but has it started to sink in?
Oh, absolutely, because, not too long ago, we had Greece was facing 18% 2-year notes, and they're back to 7%. Portugal was facing 6% 2-year notes. They're back to 2.5%. So that's already had an impact. Okay. The euro, if you've noticed, has stopped going down. So there's some good things going on.